So we're going to go over the capital assets reporting package. So I'm going to start with a PowerPoint going over a lot of the policies and theory for capital assets. And then the second half, I'll go through the package itself, which a lot of you are aware. There's a lot to the package, so that will also probably take a little bit. So starting out with the basics of capital assets. Capital assets are tangible or intangible assets held and used in an entity's operation. In the state of South Carolina, a capital asset must have a useful life of at least 2 years. So if you don't think it'll be 2 years, you don't even have to worry about capitalizing it. We also have a law on the books. It's section 10.1.140 that requires each state agency to conduct an inventory of all personal property each fiscal year. Some of you have probably seen this in your AUPs at some point if you get one. I'm bringing this up because doing an inventory each year, that personal property includes anything you have tagged. So that would be your capital assets, your low value assets, and agencies can elect to tag things that don't classify as either of those. They're under that threshold, but they still want to track them. So any of those things need to be on that inventory. But for capital assets specifically, we would really appreciate it if you can get that inventory done before the fiscal year and get any adjustments that you need to make in skis before period 13 closes, which is usually around July 22nd. And for this year, it is July 22nd. I don't know if that's the same day every year, like if it falls on the weekend, but and we have a flow chart in our reporting policies and procedures manual that has a flow chart. It's on page 104 that walks you through if something needs to be expensed, is it a low value asset, or if it needs to be a capital asset. And that can be pretty useful if you're new to capital assets. Getting these adjustments in skis before period 13 is really helpful to us. It's also helpful to you because it'll be less that you have to report on the reporting package if you've already got it in skis. Capital assets are recorded at their historical cost, which is the original cost paid to acquire and place the asset into its intended location and condition for use. It includes the consideration paid for the asset, the sales taxes, delivery and installation cost, site preparation costs, professional fees, which that can include legal fees, title costs, surveying fees, engineering fees, architectural fees, anything like that. Component equipment cost, which we don't really define what that means in our policy. I think it can kind of get a little messy to define. Like a lot of things in capital assets, as you'll see when we're going through this, there's a lot of gray area for capital assets. We're generally, I would say it's a piece of equipment that the asset you're capitalizing may need to function at its true operating capacity, or the component, adds some kind of value to the asset and doesn't really have value without the asset. And I have an example in a few slides that will illustrate that a little bit better. Those would also be things that you're billed for separately on your invoice too. So you get some parts that are just included in the cost. You don't have to worry about those. A simple example would be, let's say you bought a piece of equipment and it had a power supply that you bought that they charge you separately for whatever reason. I would capitalize that as a component equipment cost because you can't use the equipment that you purchased without the power supply. This is something you can kind of go into a rabbit hole if you think about it too much. But I will say, because the manual does not actually define it, you can just use your best judgment. I don't think there's just a whole lot there that you could get in trouble for audit purposes. And if you ever have any questions, you want to get some guidance on it, I'm happy to help. Feel free to call me. And the last thing I got here is insurance premiums paid during construction. The key thing with this is during construction. Once construction is done, you can't capitalize those insurance premiums. Historical costs did not include financing cost, and we had a change with this recently with financing costs during construction. It was just for enterprise funds, which probably doesn't apply to very many people here, if any. But that's changed. So now no financing costs are capitalized in any instance. So any interest you're paying, that should not be included in capitalization of your asset. Another thing I want to mention is if you have something that's donated, you may have to estimate the cost. You don't have, an invoice to work with. And that's fine. You just need to estimate how you came up with it. I would recommend using fair market value to do that. Sometimes that's also not feasible. Just make sure with whatever you estimate that you have it documented. One other thing I'd like to mention is you get an appraisal done of one of your assets for whatever reason, and you learn that your asset has appreciated significantly in value. Please do not increase the asset's value. We mark capital assets down if there's any kind of impairment, but we do not mark them up. So I think that's it for this. Here's an example. Historical costs. We've got an agency who purchases a 2024 Polaris Ranger 1000 Premium, which is a utility vehicle. The invoice has the cost of the Ranger. It has a flip-down windshield, a lock and ride sport roof, a winch kit. There's some training and demonstration for how to use the UTV, a 2-year maintenance service contract, delivery, sales tax, and then there's a discount. So the total for the invoice is $19,600. What amount should be capitalized? If you want to put in the chat if you have an idea of what you think the answer is, or you notice anything that shouldn't be included in the total, feel free to share, or I can just give everyone the answer in a second. Doesn't look like anyone's brave enough to try. So the answer would be 18,100. And that would be because you do not include this training, and you would not include this maintenance service contract. Now, I'm going to qualify this and make this a little complicated, kind of illustrate some of the gray areas we have with capital assets. You could make the argument that this windshield, sport roof, and winch kit shouldn't be capitalized or don't need to be capitalized. I would include them because I would say that they're component equipment, but I could see someone else saying that they're not. The UTV can function without them. I think it probably gives it some functionality it doesn't have without them, but it can function without them. But that equipment really doesn't have a whole lot of use without it. So I think the argument for including them is stronger than not including them. But I think an auditor would have a hard time writing you up for including them or excluding them. And I'm saying that based on my experience as an auditor at OSA. If you run into anything like this and you're not sure, again, please feel free to call me. Can't emphasize that enough. I'm happy to help you through it and figure out what we need to capitalize and what we don't. You want to make a call yourself, use your best judgment, but please document anything you have that's unusual so you can explain it if you do get audited. Any questions on that? All right. So these are our different asset classes. Page 103 of our manual has a list of most of the thresholds. And page 105 and 106 have more details on the useful lives. Because this is very high level, it has more detailed categories. The ACFR level, these are pretty much the categories we use, but in skis, there's all kinds of different asset classes you can select. When it comes to the useful lives, most of these cases, you have a range that you need to stick in because we, on the ACFR, have to report a range. We want to make sure everyone's sticking to that range. But you have the discretion to, for some of these, assign a whatever you feel is appropriate as long as it's in the range. In the manual, there'll be ranges for very specific things, like I think trucks. You'd have to stick in the range for trucks. But you have some discretion in determining what you think the useful life is. The one exception to that is intangible assets, or software specifically for intangible assets. That's the only one that it is only 3 years. That may change at some point, but right now it is 3 years. So land and non-depreciable land improvements. Land would be, all your parcels of real estate, includes right-of-way. Land is not depreciated. That's why this useful life is in A. And we capitalize all land and all non-depreciable land improvements. So there's no threshold for that. Depreciable land improvements, that would be anything that has a usefulness without a building. So fences, street lighting, sewage, drainage, that kind of stuff. If it needs a building to have usefulness, then it's going to be a building improvement. I'm not going to read every threshold in useful life, but the building and building improvements category, you also have leasehold improvements, which this has changed a little recently with GASB 87. That threshold is also 100,000, even though the building threshold for leases is not, and I have another slide for that. But if you have a leasehold improvement, the useful life of it is going to be the shorter of your remaining lease term. So whatever the remaining useful life is for your lease asset, or the useful life of the leasehold improvement, if for some reason it's shorter. And for that second one, that's one that you would determine based on your discretion, but it should be in this 5 to 55 year range. Sorry. Vehicles. We have a glossary in our manual too, and it defines some of these. But vehicles we define as a mechanically operated device used for transporting people or goods from one location to another. Now, I bring this up because we have some stuff that's kind of weird you're not really sure if it should be vehicles or equipment, but if its main purpose isn't to transport people or things, then it's equipment. Vehicles includes airplanes, helicopters, I'm sure we have lots of those, tractors, trailers, this is another one that I think people get confused on, boats, and buses. Those are all specifically listed in our manual. Construction equipment, there's probably not a lot of people in here with this, but this is a good example of one that you got some weird things because you could transport people and a lot of pieces of construction equipment. But if you take like an excavator, its main purpose is not to transport people or things. So that would be equipment. A dump truck, however, its main purpose is to transport materials. So you would have classified that as a vehicle. Machinery and equipment. This is kind of in some ways a catch-all category. It's any movable, tangible asset used for operations that doesn't meet the definition of vehicles or any of these other categories. So we use machinery and equipment on the aquifer, but this also includes furniture. It also includes breeding livestock, which seems kind of mean to the breeding livestock, but that's what the policy says. Sometimes it can be hard to decide between a building improvement, land improvement, and equipment, because even though things can be bolted down, they can still be somewhat movable. We don't really go into what movable means either. I would just say that if it's something you can't very easily move, like it's not just a couple bolts where there's like concrete, I would consider that immovable. And if you have no intention of moving it, then it's probably land or building improvements. Or maybe even a leasehold improvement, depending on what we're talking about. I actually had an agency call recently. They had a generator they were putting in a new building that they'd be leasing. And for some reason, they intended to take that generator with them after they were done with their lease. In that situation, I would classify that as equipment. But otherwise, that would be a leasehold improvement in that situation, or if it was in your own building, a building improvement. And that kind of depends on the type of generator we're talking about, because some of them are just equipment no matter what. But works of art and historical treasures. I have a couple slides where I'm going to get into this in a lot more detail. But this one's kind of weird because you can capitalize it differently depending on whether it's an individual item or it's a collection, and it can be depreciable or non-depreciable. But I have here just the depreciable category, and it still has the 5,000 threshold and useful life range of 10 to 25 years. Software, like I said before, is always 3 years. This would only be software we own. This would not be Subita's. Easements are an intangible asset. An easement is just you're giving one party the right to go on to or use another party's property for specified purposes without disturbing the owner's ability to use the property for other purposes. I probably don't have a whole lot in here that has that, but that's also in our manual if you ever come across it in the future and you don't remember the definition for it. This is one that we capitalize no matter what, and we don't depreciate it unless for some reason it was temporary, but they usually aren't. All other intangible assets, they still have the same $100,000 threshold, but their useful life is 3 to 38 years. Other examples of this that I don't know if anyone has are trademarks, copyrights, patents, and land use rights for water and timber. We don't go into detail of how you should assign a useful life to any of those very specific items. You should determine individually. Like I said, stick in the range. For some reason, your agency has something you feel kind of strongly is longer than this range, contact me and we can figure out if we need to maybe adjust the range. So one asset class that we have on the aquifer, apparently some agencies in here have on their books, is infrastructure. But infrastructure should only be used by DOT. No other agency is supposed to use this asset class, and I have seen where a few agencies are using this asset class. I may contact you at some point to try to fix that. But just for the future, if your agency has something that kind of meets the definition of infrastructure, please use depreciable land improvements. And that, again, would be something that the asset would be useful without the presence of any existing buildings, or use building improvements if it's only useful with the presence of an existing building. Again, please do not use this asset class going forward. And if you do end up doing this, use these ranges for, like if it's depreciable land improvements, use that range, or if it's building and improvements, use that range. Don't use the infrastructure range. I'm not sure if our manual has that range, but it is an aquifer and it's much longer. I think it's like 75 years. So I also wanted to include the lease asset classes. I don't think we have this in our manual right now. It might be in some of all the numerous guidance and videos and training we have on our website. And I'm not going to go into anything with GASB 87 or 96 in detail here. I just wanted to mention that if you have any leases for land, we had some confusion about this, I think, when it was implemented, but I think agencies were told that it should be non-depreciable. And 9 times out of 10, that's not true. It's only, well, non-amortizable, actually. But that's only true if your lease contains a purchase option and you are reasonably certain that you will exercise that purchase option. So basically, it's non-depreciable because you're going to keep the land. Otherwise, if you're just leasing it for a period of time, the useful life is going to be the life of the lease. Please, I think there's only a couple agencies that had this, but going forward, please try to keep that in mind. And I may be contacting some agencies to fix this if it hasn't already been fixed. It was determined for leases that buildings would not have a threshold. So it's a little different. If you have one that you own, it's 100,000, but for leases, it's 0. You got to capitalize it no matter what. That's actually true for land too. I didn't mention that. Please also remember that when your lease is done, whether it just ends or you terminate it, please retire the lease asset. That's another issue we're having. And we have a bunch of assets that are not being retired. I know there's no, the turn-in process for that is a little different. I don't think you have to do the same things you do when you retire your normal capital assets, but we still need you to take it off the books if it's over. And then vehicles and equipment, 5,000, Sabitas are 100,000. I think almost everyone's in this equipment category with a copier. That's almost all of our leases. And then some of you have some Sabitas.